Hola a todos, ¿cómo están? Espero que muy bien. Mi nombre es Nicolás O'Connor y soy el Publisher y CRO acá en Americonomía. Ya estamos aquí en el tercer día del evento. Hemos visto mucho contenido muy interesante a lo largo de los 2 días y hoy día seguramente también. Ahora vamos a hablar un poco del tema de ESG y tenemos un panel muy interesante con nuestros amigos de Scotiabank. Les quiero recordar que este panel se va a hacer en inglés, pero estamos aquí para contestar sus preguntas, así que igual pueden enviar sus preguntas en español o inglés y vamos a intentar contestarlas al final de la sesión. Si no podemos, igual nos pondremos en contacto vía correo electrónico. So, we're here today to talk about ESG, and we've got 4 great speakers here with us today. And I'd just like to start off with each one of you to give a brief introduction, introduce yourselves to the audience before we really get into the meat of the panel. Robert, do you want to start us off?
Thank you, Nicholas. So my name is Robert Williams, and I am currently the Senior Vice President of Corporate and Commercial Banking for Scotiabank's International Banking Division. I'm accountable for providing the strategic direction to our wholesale banking units across our footprint, ensuring that our business plans and initiatives are executed in compliance with the bank's risk appetite, regulation, and internal policies. I've been with the bank for 20 years, mostly spent in Latin America, and prior to my current role, I've served the bank in areas such as credit risk management, corporate banking, wealth management, and previous to my current role here as country head and CEO of both Panama and the Dominican Republic.
Thanks, Robert. Sandra, could you introduce yourself to the audience, please?
Sure. Thank you very much. It's a pleasure to be here. My name is Sandra Odendahl, and I'm the Vice President of Social Impact and Sustainability for Scotiabank. My team's mandate covers global corporate donations, academic partnerships, corporate sustainability, including ESG reporting, and we also have a role in corporate responsibility strategy. I've been with the bank 1 year last week, and I joined the bank from a background in responsible finance, environmental and social risk management, and more recently, social innovation and responsible investing and impact investing. And it's a real pleasure to be here. Thank you.
Thank you. Francisco, could you introduce yourself, please?
Yes, thank you for your invitation. Francisco Suarez. I'm Director on Equity Research. I cover the industries of real estate, infrastructure, cement and construction for Latin America, and also in charge of ESG research for Latam. I've been in Scotia for the past 7 years. Before that, I've been sell-side analyst for around 15 years, 5 years as a credit analyst as well in a global credit agency, and I think that the metrics in terms of overall governance and credit risk are suitable for what we are going to discuss today on ESG. Thank you.
Thanks, Francisco. And last but not least, Jason, could you introduce yourself, please?
Yeah, sure. Hi, Nicholas. It's Jason Taylor here. I'm part of the sustainable finance team at Scotia, and our capital markets division. We're tasked with integrating sustainable finance across our activities, and it's a privilege to join the conversation today. Wonderful.
So I'd like to get this sort of discussion started with a very open question that's sort of directed at the representatives from the bank. So I just wanted to ask, what is Scotiabank doing to promote ESG and sustainable finance? And I think I go to Robert for this first question.
Thank you once again, Nicholas. So, allow me to begin by providing a general overview of our efforts to advance Scotiabank's ESG agenda. And then I'll let my colleagues expand in greater detail around the impact we are having through our Sustainable Finance Group, which I believe is of greater interest to the audience today. Scotiabank has a multi-pronged approach to ESG. Some of the more tangible actions that we've taken include addressing issues such as gender inequality, diversity and inclusion, and obviously climate change. Our gender inequality, basically, Scotiabank has the Scotiabank's Women's Initiative, which is led by Gillian Riley, which seeks to support Canada's women-owned and women-led businesses by providing equal access to capital through our full suite of financing options. Also, our advisory board helps women grow their businesses through facilitating small group mentorship sessions, and our regional boot camp seeks to teach and provide women ideas on how to succeed. In regard to diversity and inclusion, we view diversity as a business imperative and a competitive advantage. In fact, our commitment to diversity and inclusion is ingrained in our core principle, which is articulated as for every future. We believe that an inclusive workplace benefits not only our employees, but also our customers, our communities, and our shareholders as well. On this front, and internally within the bank, we seek strong representation of women across all levels of our organization. We're also constantly working to increase our visible minorities in the workforce, including those of Aboriginal descent and also those with disabilities, and their overall representation within our senior management positions. Now, going to the environmental front, we've set up a sustainable finance group, which provides advice and solutions to corporate, financial, public sector, and institutional clients across our global footprint. In 2019, as part of advancing our ESG agenda, we announced our climate change commitments, including mobilizing 100 billion Canadian dollars to reduce the impacts of climate change by 2025. And we implemented the climate change risk assessment tools in corporate and commercial lending to assess the physical and transition risks that clients face due to climate change, and established a new target for contributing towards reducing the effect of greenhouse gases by 25% from our 2016 baseline. These are just some of the focus areas for Scotiabank, but as I mentioned earlier, I will let my colleagues speak in greater detail, specifically regarding to some of the milestones that we've achieved under the mandate of Sustainable Finance Group. Thank you.
Thanks, Robert. Sandra, from your introduction and from your description of what you're doing in the bank, would you be able to sort of elaborate on that a bit more and maybe explain a bit more detail about some of the different areas that you're promoting these targets, the targets you may have inside the bank?
Yeah, sure. So again, from a holistic perspective, I think one of the really interesting things to note about sustainability and ESG in the bank is that we actually have sustainability bench strength in many different areas of the bank. And as Robert alluded to, of course, we have a new sustainable finance group, relatively new sustainable finance group in global banking and markets. But we've also some people don't know this, but we've had environmental risk management, environmental and social risk management function in our risk management department for almost 2 decades. We also have a corporate sustainability team, a dedicated global corporate sustainability team. We have a dedicated ESG equity research team in global banking and markets. And then we also have ESG analysts within our global wealth management business line. So it's actually quite dispersed across the bank. And as a result of this bench strength in a lot of different businesses and functions, there are a number of different indicators of where Scotiabank has dived into a number of different ESG factors. So one of the things that we like to talk about, of course, is our climate commitments. And as Robert said, our big commitment in that regard is mobilizing $100 billion of capital by 2025. And as of last month, or I guess it was the end of September, we were about $27 billion towards that goal and moving forward. But the other types of things that we have include, offering suites of investment products to institutional investors and retail investors that are either low carbon, or we have some fossil-free products for some of our retail investors who are interested in that. We've also The Scotia Women Initiative, as an example of gender-based lending, has grown by leaps and bounds over the last number of years, starting as an initiative in our commercial banking area and now having set out some strategies within capital markets as well as within wealth management. So a lot going on in a lot of different areas. I'll just put in a plug for taking a look at our ESG report if you ever want to see the full swath of things. But we'll talk about a few more things as the hour progresses, I'm sure. Thanks.
Perfect. Thank you, Sandra. So over the past few days, we've been speaking to executives from multi-Latina companies, the biggest companies in the region. And our thesis with this event is that they are key to the reactivation of Latin America's economies and, to building back from the impact of the pandemic. But it's important, I think, for these companies to keep certain ESG strategies in mind as they build back, as they reactivate. So I wanted to go back to you actually straight away, Sandra, with, what are the key benefits for companies that invest in ESG strategies? I mean, why should it be perhaps a priority for some of these multinational, multi-Latina corporations?
Yeah, absolutely. I think I would say the benefits really fall into four categories. So I think the first benefit is the potential for business opportunity. Certainly, as a society is placing a greater amount of attention on addressing some of our more significant and more challenging social and environmental challenges, we're increasingly looking to the private sector to work in collaboration with the public sector to see what we can do to move the needle on these things. And of course, finance plays a very important role in enabling all of these initiatives to take place. So there is a lot of opportunity, of course, for the financial sector to provide the right products, financial products and services. And in the rest of the corporate sector, depending on what business you're in, certainly environmental and social imperatives are actually creating new opportunities in a lot of different sectors for new innovations, for more efficiency in operations, et cetera. So that's number one, is new markets, new business opportunities. Number two is really about the performance. It's interesting. A number of studies have shown from an investment perspective that companies that pay attention to ESG, companies that are high performing in paying attention to their environmental and social governance issues, are often high performing as well in stock markets and in investment performance. Obviously, these are macro studies, but there really is evidence that high sustainability companies do outperform their peers in the long term, and a lot of hypotheses, and I know Jason has a lot of data on this too, but there are a lot of reasons for that. But there is something to be said for performance, and then of course that attracts investors. So related to that is that investors, if you're a publicly traded company, they're increasingly asking us what we're doing to mobilize, in our case, mobilize sustainable finance, manage our own environmental, social, and governance risks, address diversity, all those issues, regardless of whether you're a bank or another type of corporation. Investors are asking us these questions, so that's an important reason. And then the other two benefits, I would say, in addition to business markets and performance, is clients. Certainly, an increasing number of large clients are asking and are actually putting this as part of their rating of the companies that they choose to provide their services. I know we're answering questionnaires on these topics. And the last is talent. Employees, and especially younger employees, are very, very much saying that they want to work for companies with a purpose, and they want to work for companies that they feel have demonstrated that they care about society.
Perfect. So there's there's an important reputational value to it. But I think I'll go to Francisco for the next question. So would you say that there's an evolution from the purely reputational value of ESG to more economic benefits, real economic benefits for companies that are pursuing these type of strategies? You've been working as an analyst for quite some time, so I imagine you've some insight on those potential gains that could be made.
Fantastic, and you're spot on what you're bringing about. All of the sudden, yes, we care about trying to see that companies do not engage in greenwashing, for that matter. That is something that we spend a lot of time. But at the end of the day, those companies that are actually embracing ESG, they will be finding a lot of opportunities on how to be better, more efficient, and actually being a potential disruptor to the overall ecosystem. The way that I think about ESG, it is about a tool to make sure that you start to think out of the box, a tool that gives you an idea of when you might be vulnerable to disruption, when you might be vulnerable to regulation. And the companies that are actually addressing this, they are finding savings, efficiencies that translates into better margins, and at the end of the day, avoiding risks. So the more that we can see a reduction of avoiding those risks and embracing those beforehand, I think that those are the companies that will be able to be more competitive.
Perfect. Would you say, how would you react to the notion that there is sort of a trade-off between ESG investment and financial returns?
Great question. Okay, for starters, it is about the evidence that it's around with us is that basically when you deal about ESG, it's about something called externalities by economists. Externalities are things that are not properly booked in the financials of a company or properly quantified as such. They could be positive or negative. In the case of carbon, for instance, those are a negative externality for that matter. But at the end of the day, what happens is that if you don't take into account those externalities, you are probably missing a lot of hidden value opportunities in your business, in the entire value chain. Let me give you an example. For instance, if all of a sudden you know that the overall trend now is migrating to a low carbon economy. So all of a sudden, if you start to realize the overall savings that you can get, those differ a little bit from country to country in Latam, but at the end of the day, you will start to see that you may be able to find a lot of savings in your overall activities as such. Well, all of a sudden, guess what? Margins can actually be more stable. You may be less subject to potential disruption from your supply chain, and with that, okay, perhaps you might not be. If you invest in a stock that all of a sudden was a company that was about to go bankrupt, and you were lucky enough to actually bought that stock at the bottom of the trend, well, you will be earning a lot of money. But the question here is, why having that risk in the first place? I think that it is much better to think about holistically about returns, and this is something that we deal with in ESG, and because the notion of risk-adjusted returns, in other words, returns that net of the overall volatility of the markets are superior. Those are the things that will be much more valuable for an investor compared to a roller coaster all of a sudden, regardless if you do a lot of money or not.
Perfect, thank you. I'm going to stay with you, Francisco, as you are based in Mexico City. Ourselves in America Economía, we have seen, I was just mentioning to Robert before we got started, that there's been a growth in events, articles, reports, studies about ESG here in Latam. That we've seen that it's over the last 6 months that it's really started to rise. But I just wanted to ask you how these strategies evolved maybe over the last 5 years, the last 10 years. Is what we're seeing over the last 3 months like an acceleration? Perhaps the pandemic has given it kind of the the kickstart that it needed? How have you seen it over the last decade, let's say?
Okay, fantastic. I think that before it was named as ESG as such, in Latin America, we talk about governance in general. And why is that? Because in Latin America, you had either family-owned companies that went public or tightly held companies within certain business groups that were having a lot of control of these wonderful companies that were put on the markets 30 years ago. So obviously, that implies that there was a potential conflict of interest between the minority shareholders and these controlling groups, either families or business entities as such. The whole point is that over the last decades, what happened is that the real focus on Latam was related with governance. Those major companies that were able to understand that they needed to abide to overall global standards and best practices, they started they were actually very interested in raising capital in the international market. So all of a sudden, rather than depending on the local regulation, they started to migrate to overall global standards. So that actually imposed a lot of benefits. Of course, it wasn't perfect. We know what happened before the Sarbanes-Oxley rules in financial markets. But at the end of the day, what happened is that the overall governance was the key major factor that was addressed over the last 2 decades. And now we are starting to see a resurgence of much more environmental factors since the past 4 years. And even before the pandemic, I would say, and probably you knew this already by the news, we saw people marching on the streets in Santiago. We saw the same happening in Colombia, and actually women demanding equal rights in Mexico before the pandemic hit. They were taking the streets as well. So I think that at the end of the day, the pandemic as such has made quite obvious the following. One, we need much more resilient value chains, because all of a sudden you face a lot of disruptions when the pandemic hit. And secondly, it is about the social factors that to some extent they were a little bit neglected, because as mentioned before, first was governance many decades ago. Now, over the past 5 years or so, it was about environmental factors. And now the social factors are starting to catch up as well in overall importance. So that's basically how we see things. And I definitely think that the notion of the pandemic is only going to make these factors even much more important. And actually, we see investors demanding much more information, particularly on social factors.
Yeah, very interesting. I think many of the companies that have participated in the event up until now, and that surely are in the audience watching us, feel very identified by what you said, because there's a lot of family-owned companies, a lot of big companies, and the multilatinas really have to be the leaders in this sense. They have to show the way with their operations in many countries across the region and trying to reach these sort of standards. Jason, Sandra mentioned that you had some interesting data on these sort of points. So I want to pose the question to you, sort of which sectors, which countries in Latin America have made sort of the biggest leaps forward, the biggest advances on this area?
Yeah, with pleasure. There's really a lot of amazing things going on in Latam, the sustainable finance market. It feels like really does feel tectonic and powerful just beneath the surface, where you're seeing sort of the systemic behavioral change that capital markets has been trying to generate, starting off in Europe over the last few years. And it really doesn't surprise me, to be honest, because Latam as a region has a really high ambition, and it's translating, and it's been driving. We can talk about, just the High Ambition Coalition. A lot of people focus on the Paris Agreement, but there are a lot of countries in Latam that were members of the High Ambition Coalition and things like that, and it's reflecting into corporate strategy, and that's driving funding strategy. So the sustainable finance market in Latam is up this year from about 10 billion, roughly 13 year over year. But what's more meaningful about that is that the overall LATAM issuance is down and the bank market's down. So you're seeing that sustainable finance transactions are really additive. If we were to isolate a couple of areas, I think, it would be hard not to talk about the sovereigns, right? We've seen a couple of transactions recently, I'd say over the last year, that have really been catalytic. Chile, for one, we can talk about, that's one of the few out there that has now a dual framework that's issued under two labels. They've won a significant amount of awards, and they've really have become a reference rate for the quality of their framework, and they've blazed the trail for a lot of issuance around them. And then we can talk about Mexico, that had a very innovative framework that came out. It was the first one to have their SDG mapping third-party verified by UNDP. So you're seeing a lot of really high-quality frameworks and a really strong commitment to quality in LATAM. And the feedback we're getting through the investor books is that these sustainability frameworks and the governance around them is actually helping these investors get over the emerging market hurdle and making them more comfortable to allocate, which is what we need. We need that capital flowing to the region. And then probably lastly, it would be difficult not to talk about the emerging sustainability loan market, or the sustainability linked bond market. And we just counted the tally up again today, and there's been 11 transactions after the Suzano transaction. So again, LATAM playing a catalytic role in global capital markets, doing it in a high quality manner, influencing behavior and unlocking capital. So we've seen 8 billion of issuance here. Suzano is tied to GHG reduction, and it's something that we've received a lot of inquiries across our teams from the region, and it's an area we think is going to grow. It complements funding programs, and it complements the use of proceeds model. So overall, some very exciting things going on in the region.
There's one point there that you mentioned that's really interesting. It's about, how these sort of frameworks become very useful for investors, for looking to invest in emerging markets where, there can be a wide spectrum of data available, various different environments, but these sort of frameworks become sort of I don't want to say gold standard, but a very reassuring sign for someone looking to enter here. So just going to stay with you, Jason, on this one. So these sort of global ESG and sustainable finance standards, are they, what I can understand, they are applicable and they would be attainable here in the region. It's something that the region can achieve.
Yeah, 100%. So the nice thing about the ICMA, so the International Capital Markets Association's guidelines and frameworks that have been just progressing and improving over a number of years now, is that they're portable across currencies. So you don't need a green bond framework for pesos, and you don't need a green bond framework for yen and euros. It's one framework that governs all currencies and all tenors. So that's the nice thing about that. Now, that said, unfortunately, there's still a bit of fragmentation in standards, although they are improving. And I think where you may see a bit of divergence would be around the taxonomy discussion. So Europe has obviously taken a leadership position on this, and the work they've done has been very admirable, and it's going to create a tidal wave across the market. But I think that in certain areas, there's potential for it to be a bit of a misalignment on pathway for certain regions around the globe. So we're starting to hear about more and more countries that are working on developing their own taxonomies. As a Canadian bank, it's something that we feel very strongly about, and we've been leading the Canadian taxonomy. My colleague Peter Johnson, the Environmental Risk Group, has been the chair of this taxonomy initiative, and but I think at the end of the day, I think everybody's working for the same shared objectives, and that's to remove friction points so capital can flow, because I think there is a bit of a race against the clock to get some of these infrastructures funded and some of these sustainability transformation to happen sooner than later.
Yeah, definitely. There's a lot of countries in the region that need that sort of financing, and We need it this decade. Francisco, going back to sort of companies and company disclosures, have you seen that investors are studying these kind of disclosures in order to define their ESG-focused targets? Is that a priority for investors today?
Definitely. Standardization in general, it is always a challenge, but I have seen a major improvement since almost 3 years ago, when we actually ranked all the around 100 companies in Latin America based on what the overall quality of disclosure was at the time and how prepared that disclosure was to give investors the real stuff that they need to make an investment decision. I would have to say the following. We have seen most of people now embracing global reporting integration standards, the GRI, but not many embracing SASBs for that matter. I think that at the end of the day, what happens with GRI is that you can align a strategy and you can align your overall disclosure to the United Nations sustainability goals that we have for 2030, and that could be a very good business strategy for that matter, if that is set at the board level of companies. But you can also align with SASB, and this has been something that investors are demanding much more. Why is the importance of SASB? SASB is mostly about not only about sustainable SDGs or sustainable development goals like the frameworks that I described before, but it is much more relevant. What is relevant for the company, and giving as well and finding these tools that we have that, depending on the industry that you are talking about, they will give you a very decent framework on what the level of disclosure and what are the relevant information for that particular industry. So yes, investors have been asked for much more and better disclosure. Yes, we have certain global standards, but it's interesting to see that, for instance, there was a local initiative here in Mexico that all of a sudden made sure to bring international investors signing for that initiative, demanding better disclosures on climate for companies in Mexico. And all of a sudden, we have more than 80 signatories in this local initiative that represents about a quarter of Mexico's GDP. So that gives you an idea of how demanding and how important the overall quality of disclosure is. And this is not about size. I mean, clearly, the leaders are the natural businesses that are fit for this task, but we are seeing wonderful examples of very little small companies that are actually doing with better practices, I would say, that the multinationals that are based in Latin America. And for instance, and to give a context of what is happening, Jason mentioned something very interesting. We don't have, for instance, in Mexico, the taxonomy as such. So that is a major tool that we clearly need in Mexico. But today, for instance, a small home builder was able to issue a green bond in the markets. It has an assurance from Sustainalytics, and it actually followed all the guidance on the climate bond initiative. So again, we're talking about a company that is embracing the overall disclosure standards already. They are actually making efforts to be sure to align to SASB as well. And all of a sudden, they can actually put a proposal and raise money on green bonds. It was the first issuance, I believe, in Latin America for such a type of industry. So, and how that translates into society? Well, at the end of the day, it matters, because all of a sudden, if you are allowed to meet these standards, to disclose what is required, all of a sudden, chances are that you are going to face an advantage in your overall cost of funding. And that cost of funding will give you a competitive edge.
So I think you could say that this would hopefully put an end to what you mentioned earlier, the greenwashing, or do you see that continuing as such, but now there seems to be real motivation for companies to really do this correctly.
Actually, in our document, when we disclose and rank the overall disclosure of these companies almost 3 years ago, we named the document something like who is embracing sustainability and if they are actually doing it for the right reasons or just for PR reasons. And yes, at the end of the day, the better that you are aligned to these tools, the less likely that you will be able to do greenwashing. Let me give you a specific example. Science-based targets. We have a couple of entities that are able to make sure that any given target in overall cuts in carbon emissions from a company are actually aligned with the Paris Agreement. And to make sure that that actually happens, well, the overall level of investments inside the company to make sure that the whole reporting framework is aligned to be able and meet the standards of what level of inventories of CO2 emissions are there, so investors can actually keep a track on that. And then after that, submit a plan in a way that this plan is consistent with the Paris agreements that we have. Well, we have a third party now that is verifying those plans, and once that they are involved in those plans, investors or analysts like me can actually keep track on what the company is doing, if they are doing well or they are falling behind schedule. So we can actually be monitoring those things. So yes, the better that you align to these principles, to the overall guidance, to the best practices, the less greenwashing you are going to do.
Fantastic. We're going to go back to talk a bit more about COVID-19 and the impact that the crisis has had on the world. And I wanted to ask you, Sandra, what sort of impact you might see on a global scale that COVID-19 would have on ESG. I don't know, can you add anything on that point?
I think Francisco touched on a couple of them already. I think there really are three biggies that are important in my view, and I think, as Francisco said, I would echo that. COVID-19 has really refocused our attention on social issues, and I do agree that for the last few years, the conversation about sustainability, in fact, and ESG performance has been dominated by climate change, by not even environment, but specifically that one very big environmental issue, which is climate change. But of course, sustainability is much broader than that. And I think that the pandemic has really shone a light on that. I think it's also shone a light on social issues in a lot of ways. I think, for example, on the individuals facing hardship and the role of companies, the role of business, to how much does business do versus government versus the individual responsibility in such uncertain times. These are really big questions in society that we've had to grapple with, and I don't think we're done yet. But bottom line, absolutely reminding us that there's an S in ESG. I think the second thing that's been super important is that I think it reminds us too that governments matter, that public sector leadership and public sector policy and the ability of the public sector to step up on big issues is actually really important. I think we saw how, in Canada, we saw governments putting out calls for manufacturers to receive funding, to put in proposals to get funding to retool their manufacturing facilities, to make protective equipment. Our own company, we partnered with a city initiative to help bring IT capabilities to small businesses during the pandemic so that they could actually go online. And so we had a bunch of digital engineers volunteer to help. So those kind of things really show that the public sector and the private sector, we really can transform society when we are actually collaborating and working together on the big issues. So I think there are going to be some lessons there for climate change that have now hopefully been absorbed. And then I think the third thing, which is related, is that we're all in this together. And I think Francisco referred to supply chains. Of course, we saw that, the interconnectedness of supply chains. But I think more broadly, the lesson there is that when one part of the system fails, it's hard for the rest of the system to thrive. And again, I think that's a really important lesson as we look at where does ESG and sustainability fit in our own corporate strategies? Where does it fit into what we push for as individuals and as citizens? And what does it mean for the way that we enable and finance the economic changes and social changes that we all want to see in the future?
Thanks, Sandra.
Yeah.
Robert, I'm going to bring you back in. How do you see ESG's role in Latin America's transformation in the reactivation next year, 2021, but further along as we move into the decade?
Sure, and I think some of my comments might sound a bit repetitive because the fact is both, Sandra, Francisco, and Jason have all expressed this in one way or another as they've been talking. But let me start by saying that, I firmly believe that ESG will play a pivotal role in LATAM's transformation and growth in 2021 and beyond. Having said this, the region does face mounting challenges that require a coordination from the public sector, multilaterals, private sector, and really society as a whole, which is a little bit to what Sandra was alluding to just a second ago. Collectively, I think COVID-19 has in fact increased the awareness of how social and environmental risk can shock the system, and how solutions to address these risks need to be created in a way that allows us to create a more systemic resilience. However, the ESG agenda, still faces resistance across many sectors, and even within levels of government due to, unaligned political and economic agendas, and different visions of what, the future should look like. However, I do believe that, governments can align to effectively combat critical issues such as climate change and in a financially sustainable manner. The good news here is that we are starting to see action being taken by key stakeholders. On the issue of aligning political and economic agendas, for example, the finance ministers from 52 countries across the world recently created the Coalition of Finance Ministers for Climate Action, for example. These countries represent in this coalition collectively represent about 16% of the world's CO2 emissions and about 30% of the world's GDP. 11 countries from LATAM are represented there, with Mexico, Colombia, and Chile all being part of our core markets as well. Obviously, we also see key players from the G7 like the United Kingdom, Germany, France, Italy, and Canada. This coalition established the Helsinki Principles, which seek to align, share, promote, mobilize, and engage into action all government and multilateral and private sector stakeholders in order to move ESG agendas forward. So, that's obviously very, very positive. And this will ultimately and hopefully be able to move the agenda in a financially sustainable manner. And just like my colleagues were mentioning regarding standardization of taxonomy and metrics, these are I think are critical to be able to determine success going forward. With standardization, we can promote transparency and allow the public and private sector to link investment with rewards for good ESG performance. And I think Francisco was alluding to this when he was talking, as an analyst, he pays attention to these sort of things, no? This in turn would lead to more capital being directed towards promoting ESG initiatives from clean energy to public sector transportation and infrastructure and so on. But we all know, and Sandra was also talking about this, that capital demands return, And I believe that the ESG agenda continues to suffer a little bit from the stigma that socially responsible investments don't necessarily satisfy the risk-return thresholds for investors. However, some of the examples that my colleagues have discussed today, specifically Francisco talking about risk-adjusted returns, are proof that there doesn't really need to be a trade-off between investments and ESG initiatives and good financial returns. I mean, you can have all of these things all together, and you can sort of think that the people that don't promote this might be a bit of an excuse to avoid a transformation that eventually has to take place. But ultimately, we at Scotiabank are already doing what we think is right when it comes to promoting a robust ESG agenda. And I think that's part of what we have to play, not only with our clients, but also internally. And we're doing it on the environmental front, as we've been discussing, on the gender equality, as I mentioned earlier, and sort of diversity and inclusion. And I think this aligns to our core principle of for every future, like I mentioned earlier.
Yeah, it's very interesting. I mean, Latin America has had a rocky last 12 months with the pandemic, with some political turmoil and stuff going on, to say the least. But it's something that I'm going to look up now after this webinar, because I'd be interested to see just how central these sort of themes are to the strategies of Pro Mexico, Pro Colombia, Pro Chile, Pro Peru. I'm not sure that their current roadshows and their current strategies take it into account as much as they possibly could. Because as you say, it's still, that stigma, I think, still exists. And they tend to look for investment in more traditional minded companies, to put it that way, Jason, I don't know if you have anything to add on this point, as how you see it helping the region transform itself over the next decade.
Yeah, I think the sustainable finance market really was put to test. It feels like it was taken out of the petri dish and really applied into real life, because the issuance had come out in a risk-on environment when perfect conditions, right? And now suddenly you had a fairly significant risk-off event. And I was very excited about the fact that the market didn't back up, and sustainable finance curves didn't back up over conventional curves. And it really had an opportunity to demonstrate the resilience characteristics of a funding program. And it really what opened up the market at the height of the pandemic were sustainability transactions. So you saw, if you can imagine, $200 billion of COVID funding come through in a variety of shapes. And then you saw some Latin demonstrated a lot of agility and pivoted very quickly, and he issued. We saw IDB do multi-tranches of COVID funding. We saw again the Republic of Chile, El Salvador, Guatemala, and they funded COVID in a variety of ways, and they didn't paralyze themselves by waiting to have frameworks that were perfect. They were and they didn't let the perfection hinder the good, and they were very quick, and the market really was receptive to these transactions, and so. To me, that was a really positive sign, and these programs really demonstrated their characteristics going forward. And I think looking ahead, as my colleagues just so eloquently expressed it, the benefits of integrating the S factor, we've seen a flood of social transactions come out, and where I think the market's reaching some important milestones. It crossed $1 trillion of green funding recently. Now we've just crossed over $100 billion of social funding, and in fact, October was the first month, if you can imagine, that had more social issuance than green issuance. So. And again, in the region, we saw some nice transactions with FIFA and again, Chile, and we saw Mexico with a lot of social use of proceeds. And, investors are really are starting to color use of proceeds. They're starting to color the balance sheet, and they're going to pay up for these types of use of proceeds. And for various reasons. And I think the issuers have responded very quickly to that investor demand, and they're delivering that. And we're starting also to see some social premiums price in. I don't think the market's ready to go as far as they would on the greenium to say, and the majority of cases you'll see a social funding premium, but we're encouraged to see that they are starting to populate, and I think it'll probably follow a similar trajectory. So you're seeing the sustainable finance market really diversify itself, and you're seeing a lot of innovation get infused into it, and you're seeing a lot of ability to customize finance strategies to different corporate profiles or industries. So naturally, I'm a bit biased from working in the sector, but I'm very optimistic about the future.
Yeah, sounds good. It's nice to sort of end that part of the discussion on a positive note on what has been a difficult year, but it's so important for this region that has so many opportunities that could be taken advantage, and to do it in a sustainable way would be fantastic. We're coming to the end of our slot, but we just have time to sort of take a couple of questions that might have come in over the hour. So there's one which I might direct to you, Sandra, just to start off with. So an event like COVID-19 has certainly illuminated urgent societal challenges. Very true. Are there any examples where we are moving beyond the E of the ESG triangle and looking to social bonds and other ESG-orientated investments that look to address health, equity, and other important social issues?
I can start, and I think my colleagues might have some more specific examples. Some of the more exciting and interesting S-related investment possibilities that I've been tracking. I'm going to talk about three, actually. So one that's been really interesting, at least in Canada, and I can't speak for the rest of the world at the moment, is Canada has an affordable housing strategy. Canada is one of the few countries that has a centralized housing authority, CMHC, Canada Mortgage and Housing Corporation. And they have a strategy, a vision where every Canadian will be able to afford housing. I'm getting their mission wrong, but I think that, and again, just tracking this isn't a formal announcement about a product or anything, but in terms of the possibilities that could create for some innovative ways to support social and affordable housing mandate in places where it is part of the federal, provincial, or regional priorities. I think there's some interesting possibilities, and we're just starting to talk about those. I think the second area was mentioned earlier, and it's definitely one that Scotiabank's been looking at a lot, is absolutely gender-based lending. It's been really interesting with the pandemic. As we all know, it's kind of shone a light on vulnerabilities in society, and areas in society where when times are good, it's all fine and you can just kind of gloss over it. But when times are bad, it actually is obvious that there's work to be done. And so two of those areas, which are kind of my second and third areas of interest for looking for financing, are gender-based lending. So Scotia Women Initiative is one that you've already heard about, where we've allocated like a $3 billion commitment to support women-led businesses through finance, education, mentorship, etc. I see that as being something that might even expand to support a broader swath of women who are less advantaged, who maybe don't have their businesses started up yet, etc. And then the third pillar is support for what we would call in Canada maybe minority business owners, or people of color, people who face either conscious or unconscious biases when they are trying to get credit or trying to move forward in their own business. And again, I think there's some interesting financing possibilities here. Again, public-private partnerships. So we have, in Canada, we recently joined the Black Entrepreneurship Program. So it's an investment from the government and the major banks of over $200 million to support Black-owned businesses with lending and financing. So I think you're going to see more stuff like that, as well as a bunch of other things that my colleagues could probably talk about as well.
Yeah, the public-private element has come through a lot, and a lot of stuff we've talked about today, and it's so key here in Latam as well, and it's something that can really bring about huge benefits. And as regards the women's initiative, it's something that we've collaborated with Scotiabank in the past. Last year, we carried out a pretty extensive survey together in Mexico, Peru, Chile, and Colombia, looking at equality in terms of women in more senior management positions in these sort of multi-Latina companies. So we're well aware that it's something that Scotiabank has been involved with for quite some time. Jason, are there any sort of examples of this S on a global scale or from around the world that you could share with the audience?
Yeah, 100%. I mean, so, we just talked about, the 100 billion of social issuance that'll go on. But I think what the world is going to probably start to, sorry, I don't want to sound like a prophet, but they're going to start to see that it's just, or appreciate that it's hard to disassociate the E and the S. They're really interrelated. Environmental problems are social problems and vice versa. And I think, one thing we try to advocate in our work as well is, we very much promote a carbon budget where possible and feasible and appropriate. But, a carbon budget, it looks awkward if there's no diversity and inclusion. You can hit net zero, but if you deal with an all-white male board, I mean, can you really argue you progressed in one area, but you certainly haven't progressed in the other? So we try to really advocate to interconnect and interrelate both, and it's an easy case to make, because when you talk about social factors, you're talking about performance. I mean, over and above and beyond what we think is an ethical thing to do, it's companies and governments that have more diversity simply perform better, and they make better decisions. They're more innovative. So I think that these are all characteristics, like Sandra was saying, that maybe when times are good, they're maybe less appreciated, but now that things, this might have changed the dynamic where people can now expose these issues and appreciate the characteristics of them a bit more. So I think I'm expecting some really interesting things in 2021, and I'm curious to see if the market will attain its first year of $1 trillion of issuance in 1 year. So now we've crossed over $1 trillion of green issuance cumulatively over, call it 15 years. But now I'm really curious to see if there's going to be an inflection point for a variety of reasons where the market might issue $1 trillion in 2021. That to me would be my wish list for this year.
Well, we can hope it comes true. Francisco, have you sort of any examples of the S again, of ESG in Latin America? I can imagine that, I don't know how common it is, but when you tend to look at the boards of a lot of companies, a lot of multi-Latina companies, you tend to see 12 white guys, 60 years plus. So I don't know, have you anything that, you can share from the region?
Definitely. I would have to say that I am very encouraged for what I see in countries like Colombia. The overall diversity that you get in the boards, the top management that is ruled also with a wonderful proportion of women taking decisions. It is fantastic. And I have to say that Mexico within Latin America is doing a very poor job. So yes, you are right. At the end of the day, the way I see it is that, as mentioned, ESG is a tool to remain competitive. It is a way of thinking that enables you to disrupt your competition, to envision potential threats over the next 10 years that may jeopardize your business, or the other way around. It is about making sure that you are able to embrace those major opportunities, because you have to change and you have to make sure that the board changes. So it is, imagine the following. 20 years ago, perhaps in the boards of Televisa, the major broadcaster here in Mexico, they were talking about, hey, what kind of soap opera might be the next hit for the next season? And then we will be discussing among board members, old guys, old school guys, by the way, about their kids actually discussing what kind of soap opera would do better. Well, now probably some of those board members, they have kids that they don't see television in the first place. They only do Facebook and the TikToks and they stream and whatever, but they don't see TV. So again, I think that at the end of the day, definitely the more diverse your boards are, the more inclusive your corporations are, the real benefits will be in the sense of having these out-of-the-box ideas flowing, making sure that the threats are checked, making sure that the overall next trends can actually be translated into opportunities for companies. So yes, I'm encouraged to see what I see in Colombia. Mexico is lagging behind. Chile perhaps a little bit as well. And if I had to say about trying to mix a little bit between the S and the E, two major systemic risks in Latin America for two countries. Those are Chile and Mexico, and those relate with water security. In general, I think that the link between potential migrations, social unrest, and the absence of water, that is a major systemic threat that has to be addressed. And clearly, it is the link between the environmental and social factors, in my view.
No, definitely, it was a key theme in the protests here. The estallido social that was so large. Corruption and poor governance was a huge theme in what we've seen happen in Peru over the last week or so. So there's definitely, the data shows that it can be beneficial for companies to really engage with ESG. So I think it's about time, and especially for the multi-Latina companies that are tuning in, take note. So I think we're coming just to the end of the hour. I'd like to go to you, Robert, just to, as we started with you, maybe we can finish off with you as well. Scotiabank is a bank with presence throughout several markets in Latin America, from Mexico downwards. I'd imagine you work with an awful lot of clients, investors, but I can also imagine that these clients, they're facing a lot of challenges. It can be pretty difficult to start implementing these policies and really possibly change something, or the way a company has been working for decades, generations. As a banking partner, what is your role in that? How do you fit into that sort of chain of decision making and improving the business?
Well, thank you, Nicholas. So I would say that on this point, as bankers, I think we need to stay up to date with how the ESG space is evolving, because ultimately, knowledge is also capital, right? So we need to make sure that we stay up to date with the evolution of the agenda. And I think part of that we demonstrate it through obviously all of the different initiatives that Sandra mentioned earlier on regarding not only the Sustainable Finance Group, but everything that we've been doing over the last couple of decades in terms of our risk approach to business, and making sure that we keep our eye on the environmental impact of some of our clients have in their communities and in their areas. And also by providing subject matter expert advice and guidance to our clients, and also to the broader base of our internal bankers. I think that's a role that we have to play. We have to be there close to our clients, advising them as well. What's right and what's not in terms of some of the projects that they have on the go, and be very clear with them how far we're willing to go when it comes to deploying capital on this, right? So also, and I also mentioned a little bit about how we approach the whole issue of analyzing credit, and in our case, the climate change risk assessment tool that we've put in place to help assist our corporate and commercial clients assess their physical risk and their transition risk from a non-ESG agenda towards an ESG agenda, I think is also a way that we make a difference, right? Is there more that has to be done? Of course there is. I think that there's plenty of space still to grow on this and to evolve. But our commitment is to remain knowledgeable and up to date with the trends in order to serve our clients and to be able to help create impact.
Thanks, Robert. Well, we've come to the end of our webinar. I think there's a few key takeaways that we've come across in this past hour. The importance of ESG for attracting investment, the benefits that it can have for the structure and the development and the results of the companies involved. And I'd also want to highlight the fact that we mentioned several times the public-private partnerships. I think that's something that we see a lot of in our reporting across Latin America, and I do think it can be hugely beneficial for all involved. I'd like to thank our four panelists, Sandra, Jason, Francisco, and Robert. And we have to move on now to our next webinar. So, están todos invitados a la próxima charla de multilatinas y la reactivación. Gracias.
Muchas gracias.
Muchas gracias. Thank you.
Thank you, everybody.
Gracias.
Okay.